Hello viewers, welcome back to Bhaskar's Insurance for You and Me series. In the last episode of our series, we have discussed on certain major changes brought about in health insurance by IRDA Regulations 2024. Subsequently, a detailed circular has been issued by IRDA detailing the reforms to be implemented in health insurance. In this episode, we will try to understand some of these major changes. Through a master circular dated 29th May 2024, IRDAI has brought in many reforms in the way health insurance is being operated. This circular supersedes about 55 circulars which were issued by IRDAI earlier. It means that the health insurance business in India would now be guided only by the following. IRDAI Insurance Products Regulations 2024, which we discussed in last episode. Master Circular on IRDA Insurance Products Regulation 2024 Health Insurance, which we are discussing now. IRDA Protection of Policyholders' Interest, etc. Regulations 2024, and any other circular that might be issued in this connection by the regulator in future. Now we will see in detail some of the changes along with likely implications of the same. We have already discussed on various product changes brought about through IRDA Insurance Product Regulations 2024. The main changes brought in were regarding the following areas: entry age limits, pre-existing diseases definition and waiting period, specific waiting periods, moratorium period, coverage for persons with existing medical conditions, and grace periods. The current circular specifies that health and general insurers are required to modify their health insurance products to be in line with these product regulations by 30th September 2024. So 30th September 2024 is the timeline within which the various insurance product changes through the regulations 2024 are to be implemented by the insurers. As some of these changes are likely to have impact on the admissible losses under the policies, insurers may consider revision of premium rates for these products. Regarding the product availability, the insurers are required to provide wider choice of products. The products must be made available to cater to all ages, all existing medical conditions, pre-existing conditions and chronic conditions, all systems of medicine and treatment, and every situation of treatment, including domiciliary treatment, outpatient treatment, daycare and home care treatment, and all regions, that is all occupational categories, persons with disabilities on any other categories, all types of hospitals and healthcare providers. These are all the areas for which the insurers are required to provide the product choices. A notable inclusion here is the need to make available the products or add-ons to cover outpatient treatment, what we call OPD, and the home care treatment. There are very few products now which include these covers. The current circular is expected to make insurers consider this important area for innovative product development, either as standalone product or as add-on cover under existing products. The next topic is on the products to cover technological advancements and treatments. The circular specifies that the insurers shall endeavor to cover treatments using technological advancements. That is, the insurers will endeavor to cover treatment using the technological advancements under their policies. It may be noted that as per the earlier guidelines, which are repealed now, the insurers were required to ensure that the modern treatment procedures are not excluded in the health insurance cover. Through the current wordings, the compulsory element seems to have been removed and insurers are asked to endeavor to provide the cover. It is only hoped that in spite of this relaxation, the insurers would continue to provide cover for the treatment using the technological advancements. The next aspect is on the customer information sheet, where the circular makes it compulsory to provide the revised customer information sheet with every policy and obtain acknowledgement from the policyholder. This revised CIS, that is a customer information sheet, was introduced last year itself and which was to be made effective from 1st January 2024. Hence, this particular provision is a continuing requirement. The insurers are also required to provide products to comply with the requirements under various laws like the Mental Health Care Act of 2017, the Right of Persons with Disabilities Act 2016, the Surrogacy Regulation Act 2021, the Transgender Person Protection of Rights Act 2019, and the HIV and AIDS Prevention and Control Act 2017. This requirement was already there as per the existing provisions themselves, as per the prior circulars from the regulator, except for the Transgender Persons Protection of Rights Act 2019. Hence, this provision, we may call it as a continuum of the existing provisions. Regarding the policy cancellation condition, the circular provides that the policyholder may cancel his or her policy at any time during the policy by giving 7 days notice and is entitled for refund of proportionate premium for the unexpired policy period. However, this provision is applicable only for indemnity-based health insurance. The old practice is to provide the refund after retaining premium on short period scales for the period the company was on risk. So this change is highly beneficial to customers and will result in higher refunds in cancellation cases. Next, we'll have a look at the provision pertaining to free look period. The circular introduces a free look period of 30 days for the policyholder to review the terms and conditions of the policy and provides option to cancel the policy if the policyholder is not satisfied with the policy terms and conditions. Also, as provided under IRDA Protection of Policyholders' Interest Regulation of 2024, the policyholder is entitled to a refund of premium paid subject to deduction of a proportionate risk premium for the period of cover and the expenses, if any, incurred by insurer. Now, though this provision was available earlier also under health regulations, the period is now increased to 30 days from the erstwhile period of 15 days. So, now the policyholder gets additional time for reviewing the policy terms. Here is one more aspect to be noted. As explained before, as per the current circular, the insured has an option to cancel the policy by giving 7 days notice and he is entitled for refund of proportionate premium for unexpired policy period. Hence, in my view, as the refund under free look period cancellation and refund under normal policy cancellation request by the insured does not vary much. The free look period clause does not seem to add any special benefit to the customer. This particular circular also provides a nomination facility for the purpose of payment of claims. Now, it's a welcome provision helping to avoid dispute in case the policyholder dies while the health insurance claim is in process. Of course, this will apply only in respect of small number of claims which are settled on reimbursement mode. The next aspect is on the grace period. The grace period is provided under this circular is 15 days where the premium payment is done in monthly installment mode and 30 days in other cases. Earlier, the insurers were allowing a grace period of 30 days for renewal of policies. Importantly, earlier no cover was available during the period for which the premium was not received. Now the coverage shall be offered during the grace period also if the premium is paid in installments. This is a very helpful provision for customers who may miss the premium due date due to some contingencies. As per IRDA Insurance Products Regulation 2024, both the option of migration, which is a transfer of any indemnity-based health policy to an alternative health product with the same insurer, and portability, which is a transfer of any indemnity-based health policy to an alternative health product with a different insurer without loss of renewal benefits. Both these provisions are available under health insurance. The earlier provision were allowing migration from both individual and group policies, whereas portability was allowed only under individual health insurance policies. Under the new provisions, both migration and portability are allowed from individual as well as group policies. So even if the customer is covered under a group health insurance policy and wants to port into an individual health insurance policy of a different insurer, the same is possible now. As per the provisions under the new circular, the transfer of information on existing benefits between existing insurer and the acquiring insurer during the portability process shall happen through the interface of Insurance Information Bureau of India. And the maximum time limit allowed for the existing insurer for giving the information is 72 hours. Similarly, the time limit permitted for acquiring insurer to decide on the portability request is 5 days from the day of receipt of information. So these timelines are being introduced now, and this is very, very important. So this time limit for insurers set by the regulator is expected to speed up and streamline the process of portability. Regarding the cashless facility approvals, the new provisions by the regulator is setting certain timelines. The initial cashless authorization must be done within a time limit of 1 hour and final authorization of claim within 3 hours from the receipt of request. In cases where authorization happens beyond 3 hours leading to any additional amount to be paid by insured, the insurers are required to bear this amount. In a way, this is a penalty for the insurers who delay the approvals. It is to be noted that even now these approvals are happening within the mentioned time for most of the claims. The delays seems to be happening only in those cases where the documentation provided is insufficient, which leads to unnecessary communications. The insurers need to work on streamlining the document requirement and avoid query processes to ensure that they stick to the given timelines. This provision, once implemented with all its seriousness, will go a long way in reinforcing the customer trust on insurers. The new provisions also mandate that any claim repudiation by any insurer needs to be done with the approval of a product management committee or claims review committee. While this may delay the process of claim repudiation to some extent, it will ensure that additional levels of screening is done at senior level, taking care that claim repudiation is not done based on wrong or narrow interpretation of policy terms. This is expected to bring down the repudiation levels and also claim related litigations. Regarding the claims under multiple policies, when the policyholder is covered under multiple health insurance policies, it is his or her choice as to from which insurer he wants to prefer the claim. This provision is same as what is existing even before the new circular. However, the new provisions adds that in case the claim amount is more than the admissible amount under the policy, the insurer with whom the claim was preferred shall seek the detail of other available policies from the policyholder and shall coordinate with other insurers to ensure settlement of the balance amount as per policy conditions. Basically, it means that the insurer with whom the client prefers his claim shall settle its part of claim and also coordinate with other insurers to settle the balance claim. While this is a very idealistic provision to ensure that the policyholder does not face any hassles, it can lead to many practical challenges. In what capacity an insurer should approach another insurer for settlement of the customer's claim is not very clear. This may need the insurers to sit together and evolve some common guidelines in handling such claims in the interest of creating customer delight. This circular also provides for penal provisions in case of delay by insurers in settlement of Ombudsman awards. In case of insurers' non-compliance with Insurance Ombudsman Award within the time limit, they need to pay a penalty of Rs 5,000 per day of delay to the complainant. This would certainly improve the compliance levels in Ombudsman Awards and provide timely relief to customers. There is an additional provision in the circular providing for clawback of remuneration or charges paid to TPA based on customer feedback, and the clawed back amount is to be passed on to the customers. The intention behind the provision seems to be noble, but the implementation may have a lot of challenges. Thus, the main thrust of these new provisions is customer focus, providing wider product options, streamlined processes, and faster services. The hope is that this will ensure customer satisfaction and enable higher penetration. I will come back in the next episode with some more details on general insurance products. Until then, bye from Bhaskar.